Thank you for inviting me. I'm going to speak a little bit about the tokenized economy here, and talk about digital assets in general. So when it comes to banks and traditional financial institutions, we typically find the crypto sector to be a little bit scary. So that's why we like to call it digital assets, which is a less scary concept. Well, I have a 5-year background in the crypto industry, so I have a little bit different perspective from the typical person in a bank. But this is how we see the landscape. So we see these emerging technologies built on blockchain and distributed ledger in general. And you can broadly categorize them into cryptocurrencies, your Bitcoin, your Ether, and so on. You have digital money. There you have stable coins, you have central bank digital currencies, you have tokenized deposits. And then you have various forms of tokenized assets. So these could be, or at least from a bank perspective, we see them as tokenized financial products. So these are products and services that we offer today, but that you could offer in a tokenized form. And then you have other types of tokenized assets that could be tokenized physical assets like a car or real estate and so on, and also intangible assets like patents and trademarks and so on. And the technology behind it is similar in that everything is built on blockchain or DLT technology. So today I won't focus that much on crypto. That has already been spoken a little bit about, but I'll talk about the tokenized economy outside of cryptocurrencies. And this is a chart made by Boston Consulting Group, where they're stating that they think the tokenized economy will grow to be $16 trillion within 2030. We don't know if that number is correct, but the takeaway here is that really smart people think that this will be a really big deal in not so distant future. And you can see the categories here. They are talking about securities, so equities, bonds, but also other types of financial assets, could be trade finance and so on, and also other tokenizable assets. So some I mentioned earlier. It could also be, for example, fine art and so on. So naturally, when you see these numbers as a bank, you start to become really excited about the possibilities. And Bank of New York Mellon, which is the world's largest custodian, they did a survey together with Sealant, and they asked, I think, about 300 institutional investors what they thought about tokenization. And 97% of those they asked said that they think tokenization will revolutionize asset management, which is quite a bold statement here. And a very large percentage of them also truly believes in digital forms of cash or tokenized money. So what is tokenization of assets? Well, it's one definition is that it refers to the process of generating a digital representation of traditional assets on a programmable platform. So a much easier way to say that is that you take some type of traditional assets, could be a bond, for example, and you put it on a blockchain. So you represent the ownership of the bond or any sort of asset with a token. And through putting the ownership on a token, then you get all the benefits that we're seeing in crypto today with DeFi and also with centralized exchanges, which proves to be, it has quite the potential for improvements compared to the traditional financial system that we have today. And this is typically done through blockchain or other types of DLT technologies. And some of the potential benefits that we're seeing are it could be operational efficiency. That could be done through automation of processes. It means that we can have faster, cheaper transactions. We can also build smart contracts on top of the assets, so we can make a lot of programmability. We can create new types of products on top. It also gives us the opportunity to fractionalize assets. So you can take a bond, you can split it into 1,000 parts, and that could make it more accessible for people with less money. And that's especially relevant for, say, for example, real estate or a house. You have a lot of real estate that's very expensive, so it's not possible for a lot of people to invest in those types of assets. By fractionalizing it, you could make it accessible to a lot more people. The same goes for fine art, which is something that regular investors typically cannot afford to invest in. If you fractionalize the ownership of it, then you could make it accessible to a lot more people. You could also have transparency. Now that's a little bit more optional. It depends on whether you build it on a public or a private blockchain and so on. But potentially here you could have a lot more transparency. And one example there is the financial crisis. Part of what caused the financial crisis was the lack of transparency into the mortgages that backed the mortgage-backed securities that were traded. Now, with a tokenized product, you could potentially have the traceability and the transparency to actually see all the individual mortgages that were a part of those packages, and maybe we could have prevented it from happening. You also have a single source of truth for extended ecosystems, and what that means is that when you have assets today, there's typically a lot of data points related to those assets, but that are stored in different databases. So with a single source of truth, which would be one blockchain, for example, where all the data is stored, you can have a lot more efficiency when it comes to gathering those data points, and also make sure that all the market participants have the same data. And also it opens up a lot of new exciting business opportunities. So as I mentioned with the example of fine art, that's not something that is traded through banks today, but potentially it could be in the future. And I've borrowed this chart from EY. It's a very nice categorization of different types of tokenization. And it just points towards those different types of categories that you can tokenize. So it's a nice way to think about it. So you have the tokenized money. That's, as I mentioned, you have the central bank digital currencies, you have stable coins, tokenized deposits, and so on. You have the physical object or the real world assets that we typically talk about. That could be either securities, that could also be real estate or physical objects, but you also lastly have the intangible objects that I mentioned, so such as copyrights and trademarks and so on. And let's dive a little bit into the tokenized money, because that's a very key part of this ecosystem. So once you have a tokenized asset, so for example a bond, then you sort of need a tokenized money as well if you want to make the transactions of these assets more efficient. And here you have various alternatives. You have the public alternatives, that could be central bank digital currencies that we see a lot of central banks are working on, either retail or wholesale. I'll dig a little bit deeper into that in one of the next slides. It could also be a cryptocurrency like Bitcoin. That's the public alternative. Probably not something that banks would prefer, but other people would prefer it. And then you also have private alternatives. So you have both stable coins that we see a lot of fintechs today are building, and you also have tokenized bank deposits that I will dive a little bit deeper into. So let's start with the central bank digital currencies. So this is one of the most updated maps I've found on the various countries in the world and how far they've gotten on developing central bank digital currencies. So as you can see, the orange ones, they are in pilots. The purple ones are in proof of concepts. And a lot of countries are also researching. You have a few countries, Nigeria and some East Caribbean islands have already launched it live. And a couple of countries have canceled the exploration for now. But the takeaway is that more or less every serious central bank is looking at developing some type of central bank digital currency. And Norges Bank, they worked on it for several years. They have done some proof of concepts earlier, and they will give a recommendation to the Norwegian government in 2 years on the introduction of CBDCs in Norway. Also in the EU, they're working rapidly with the development of this right now. The work they are doing, it looks more like a new type of payment system, but they are working towards 2028 is the last approximation that I heard. So this is moving along in more or less every serious country. It will be a new type of money that will show up. And you separate between two types of central bank digital currencies. So it's the retail ones that are offered directly out to consumers. And then you also have the wholesale ones, which are for financial institutions. And if we start with the retail one, that would be currency issued by the central bank. Typically, it's done through a two-layer system. So it would mean, like in the image on the right side here, it would mean that the central bank issue it, distribute it to the commercial banks that, again, will distribute it out to their clients. And this would be an alternative type of money. It will have the same value, of course, as regular money. But it would be a claim on the central banks in the same way that cash is today, only that you will have the programmability on top. Also, this is typically done on an operating model that is 24/7, same as we're seeing in crypto today, with more near instant transactions is typically what is looked at. Supposed to be complementary to cash and be an alternative financial system, just in case, say, the banking system goes down, then you should have some type of retail CBDC to be used in that case. And in the past, I've seen that most central banks said that they are not looking at interest on these type of CBDCs. But now the narrative is changing a little bit. So we're seeing that central banks are looking more and more at having interest rates on the CBDC as well, because that could be an instrument for political or monetary policies as well. If that would be the case, they would compete with commercial banks, so it would be very interesting to see how you actually build that out in practice. And it's also proposed that there might be some limitations on the amount you can own. These are all questions that need to be addressed before the introduction. And when it comes to the wholesale CBDC, now we already have a wholesale CBDC system, just it's not built on blockchain technology, the one we have today. But we're seeing that a lot of central banks are looking at these options as well. So it would be a settlement system for financial institutions built on some sort of DLT system. And the benefits would potentially be programmability and efficiency. You can have faster, cheaper transactions and so on. And I think also, yeah, I see we're missing one slide, so I'll just do that without the slide. But one of the interesting aspects of having wholesale CBDC is the potential for building a tokenized bank deposit on top. So as I talked about in one of the earlier slides here with the forms of private tokenized money. Let's see if I can find it here. Here, so you have the private alternatives that are stable coins and tokenized bank deposits. So if you have a wholesale central bank digital currency, you could also create a tokenized bank deposit on top of that, where you have the backing for the tokenized bank deposits would be the wholesale CBDC, and then you could issue that out to the retail market instead of the central bank doing it directly. And that could be also a very interesting option. So we're seeing today that we see the tokenized money market is dominated by stablecoins issued by fintechs. But with stablecoins, it's typically backed one-to-one, so it doesn't offer the possibility for fractional reserve banking. So it doesn't have the same benefits as typical bank deposits has. Also, stablecoins are typically a bearer instrument, so the one that owns the stablecoin has the claim on the issuer of the stablecoin. And for banks, this is not something that you typically like. You want to know who your customers are. You don't want a claim on your bank to be freely transferable in the market outside of your customer base. So that's why tokenized bank deposits could be much more palatable for banks. On the flip side of that, you don't have the regulation on tokenized bank deposits ready yet, while stablecoins are regulated through MiCA, so now you have a proper regulatory framework on how to issue stablecoins. So if you would, as a bank, if you want to move into the markets in the next few years, then you now have the framework for how to do it within the European Union with the MiCA regulation. So my guess is that we will see a lot more banks in the coming years starting to issue stablecoins if they want to be early into the markets of tokenized money. But we'll see what will happen. Now, to summarize some of the benefits of a tokenized economy, the first one is efficiency. So you can dramatically reduce both the cost and the time of transactions. You can also build smart contracts on top of it, so you can bundle transactions in a much more efficient ways. And you can also create much more complex transactions that are automated using tokenized assets and tokenized money. Now, also, when you have both of them, you can create what's called atomic settlements. So right now, if you have an asset, you want to sell it, and you don't trust the person who buys the asset, then you need some sort of middleman or escrow service to make sure that the delivery of the assets happens at the same time as the delivery of the payments. With tokenized economy, where you have both the money and the asset tokenized, you can create atomic settlements, which means it happens automatically through smart contracts and near instantaneous. So we don't have to wait the couple of days it takes now to settle securities. It could also dramatically increase liquidity. So this is especially interesting for markets that are low in liquidity. This could be a real estate market, for example. It takes a long time to sell a house. It's not a very liquid market. But it could also be, for example, private equity that are typically offered in very closed ecosystems, and it's not typically offered outside. Transparency, as I mentioned, you could have the transparency of the assets. Where has it been in the past? That could be very beneficial for AML purposes or anti-money laundering. And lastly, but not least, the accessibility. So right now, when you issue new types of assets, it's typically done by an investment bank, and it's typically done first to accredited investors. Then it's put on an exchange, maybe, and those who have access to that specific exchange can buy that product. But with tokenized assets, you could potentially have the issuer company not be banks, but it could also be regular corporates that want to issue some sort of tokenized asset. And they can also go directly, depending on the regulation, of course, into a digital channel to trade it. So there are a lot of potential benefits, and these benefits are starting to become very apparent to banks and financial institutions. So we are seeing a lot of banks make public statements these days on that they're actually starting to move into this area. So some of these are from September, I mean this month, and all of them are from this year. And you can see that many major banks are now looking at tokenized deposits. You have the European Investment Bank. They invested 1 billion Swedish kroner on a tokenized bond that was issued by SEB and also Crédit Agricole. So that's our neighbors. Also, you have ANC, one of the largest banks in Australia. They are looking at stablecoins. They have already issued stablecoins. ABN AMRO, Dutch bank, they have issued a digital bond as well. And now we have London Stock Exchange. They are saying that they are planning to build a digital asset exchange for tokenized assets. And all of these news are a few months old. There are many, many more examples I could give. But yeah, just to give some examples that there are actually a lot of things happening here. I think one of the problems today is that people are building on different ecosystems. Everyone is trying to create their own standard. And many of the operational benefits that we can see will materialize if we have a lot of participants creating stuff on the same platform, or at least the same standard. So it will take some time, but my personal perspective now is that this development is starting to become inevitable. So it's just a matter of time until we start to see a lot of assets being tokenized and a lot of these potential benefits starting to materialize. Yeah, thank you.
I just want to ask you one question, Nikolai. Thank you for your presentation, and that is more related to the role you have now in DNB. You have been there since October last year, and you are in an explorative phase, as I understand it. You are digging around and thinking about what kind of concepts that you can offer. When will we see a product or a service from DNB?
Yeah, when we're ready. It's the boring, it's the boring answer. But yeah, no, we're exploring all of these things. With at least me and the team I'm working with, we think this is very interesting, and there are other people in the bank as well that find these things very interesting. But from a bank's perspective, there's very low risk appetite. There's also the regulatory questions, so you need to make sure that the regulation is in place and everything is clarified legally and so on. So it takes a lot of time to innovate from a bank, at least when it comes to new technology. But yeah, hopefully we can announce something in the not too far future.
Thank you. Just to make clear that this presentation, I think it is the first total presentation of tokenized economy in Norway. So Let's applaud Nikolai for giving this insight. Thank you very much.
Thank you.